Hi, this is Josh Landau, the president of the International Insurance Society. Thanks for joining us today. Today, we're here to talk about a new thought leadership piece on the future of the Chief Underwriting Officer, presented by Accenture. As most of you know, Accenture is a global professional services company with leading capabilities in digital, cloud, and security. Joining me today from Accenture is Michael Reilly, the Director of Insurance Underwriting Community of Practice, and Kim Gulley, Product Strategy and Development Lead for Accenture Life and Annuity Software. Michael, Kim, thank you for joining me today. Why don't we just kick it off right away and jump right into it about the paper, and tell us a little bit about why you wrote this new white paper about the role of the Chief Underwriting Officer.
Thanks, Josh. First of all, very happy to be here. We're very excited to kind of talk about this topic. When we started to look at underwriting, what we're seeing is a lot of big changes coming in at the same time. There are changes in technology with regards to artificial intelligence, changes in risk profile, changing the global nature of risk, changes in distribution that are causing, different needs for the underwriting to either be faster or more efficient or be nimbler and return in different ways. And we looked at how underwriting was responding. And because historically underwriting is kind of divided in individual P&Ls, we were throwing lots of tactical solutions and lots of tactical pieces of it, but we weren't really addressing it strategically. We weren't really even thinking about it strategically because we're just thinking about it in these little pieces. And there was this need to take a step back and really rethink what underwriting could be like, because essentially underwriting hasn't changed in 40 years. We've changed technologies and platforms a little bit, but it's still essentially the same. And yet there's huge opportunities to reimagine. And so when we look as to who is in the right position to considering doing that, we started to think of the Chief Underwriting Officer. And similar to the changes we saw with actuarial need to becoming, with the Chief Financial Officer and the CIO need to become strategic, we now need that same need for a strategic thinker within underwriting. And the Chief Underwriter Officer was the natural position that we kind of started to land on and think about. Kim, you want to add your thoughts?
Makes total sense.
Yeah. Hey, Josh, thanks for inviting me. I appreciate the opportunity. I'm pretty aligned with Michael. Maybe an opportunist, who knows, in the life industry, but I see so much opportunity to improve. I also believe our future consumers have different expectations on how they expect to purchase. I think underwriting is a really exciting area, and it has to evolve, especially over the short term. If you look at adoption of cloud in our industry, it was very slow to start, and then it just exploded. So if we look at an analogy, let's take a snowball. The more momentum it gathers, so too will the size and speed. So this is something that's just going to just grow exponentially, and I'm not a very good bystander.
So on that theme then, how do you see the role of the Chief Underwriting Officer changing over the next few years?
So when you look at the Chief Underwriting Officer today, they play an extremely important role, right? They help manage capital allocation, they help set the underwriting standards, they kind of help set the underwriting controls, but they're more a governor on the process, right? They help make sure that underwriting functions well, but they're not the driver. They don't set the direction. That's been left to the individual P&Ls. The trouble is that the challenges that underwriting faces today are not something that, a small business or just the life insurance side or just the group can kind of tackle by themselves. There are bigger issues that require bigger thinking, how to bring data more comprehensively in, how to have a full analytics approach all the way through my end-to-end process, how to change my distribution. They require, bigger thinking and bigger strategic alignment. So we need this, basically the Chief Underwriting Officer to move from being the governor on the car to helping being the driver on the car and setting that direction and where it goes to bring the different groups along so that investments can be aligned. And these bigger leaps and bigger challenges that underwriting is poised to take, it can actually start to take those steps.
So then why have insurers held back on this change up to this point?
Well, I think a couple things. I think, one is inertia, right? Underwriting is, insurance in general is a little bit conservative. Underwriting is very conservative. And, they try to take small tactical steps and stuff along the way. The trouble is the tactical steps aren't leading to leading to where we need to be. After a lot of major technology implementations, sometimes underwriters says their jobs are the same or worse than what they were before. We walked into one carrier and looked at, and the underwriter was supposed to use 92 different models that were supposed to help them do their job. So they had included analytics, they had included even some cool AI things, but they did it in such a way that the job became worse, the job became harder, and we weren't actually improving and driving true performance because the tactical steps or thinking about that small tactical piece, while it was moving in the right direction, couldn't really set the broader strategic changes that are needed to really transform. The model works today to do incremental changes. The trouble is the challenges that we face aren't incremental in nature. The challenges that we face require more transformative or more strategic thinking to really get the leaps ahead and really drive solid performance, either significant changes in expense or significant changes in driving loss ratio and improvement, requires a different way of thinking today.
Let me add to that, thanks. I'm completely aligned with Michael, but I'd like to extend it. Like he said, we work in an industry that is risk averse, especially when you compare it to others like trade platforms, etc. We're very slow to adopt change. And in some cases, we tend to have this concept of if it's not broken, let's not fix it approach. The challenge that I see coming out of the left corner is the consumer market is changing rapidly. How we purchase generally today has taken a right turn over the years, thanks to the likes of Amazon, etc. It's all instant, simple. And if we look at the Generation Z, this will drive the final push, particularly in the life insurance business. As the new generation starts to engage, they'll expect the purchasing model to be vastly different from what it is today. An early flag to me was my son-in-law and my daughter, who were genuinely surprised when I was speaking to the other night at dinner. The process they went through to buy life insurance for the first time as a young, newly married couple, for two young, healthy, active individuals, the process took weeks for them to get it. And they probably rang me 2 or 3 times asking me if this was normal. So the market is definitely changing, and the expectation is going to change rapidly in the near future.
Yeah, I expect that. And then on that point, then pivoting a bit to the practical nature on this, in order for this evolution of the Chief Underwriting Officer to work the way you say it should, insurers are going to need a great deal of technology to help with the process. Practically speaking, is this even possible to do today, or are we really looking far out into the future?
Absolutely. The short answer is yes. There's an abundance of new tech startups and AI frameworks that can support the direction underwriting needs to go. In addition, in today's modern policy admin systems, with their open APIs and a distribution model you can absorb from the cloud, you can easily partner with the new tech. When I look around, it's really interesting. And what I see is available. I go to the conferences and I look and I engage with partners, and I'm constantly speaking at different venues. I feel like a kid in a candy store. It's like there's so much there, so much opportunity I can grab and move on with. I think all that's left to do is to define the path for your particular business and then integrate with the right partners.
Yeah, I would add on. I mean, the future is here. It happens to be unevenly distributed, right? It's not here in all places. It's not here in all cases, and we haven't necessarily linked it together. But the limiting factor is not the technology. The limiting factor is imagination. And the boldness to follow through with a reimagined future of what underwriting can become.
Yeah. Kim, you mentioned AI, and one thing we've been hearing for years is that AI is going to replace underwriters. Yet you make the case in the paper that there's strong evidence that humans plus machine is the way to go. Can you expand on that a little bit?
Sure. Yes, it's small steps. So at Accenture, we believe in the concept of human plus machine. So what that means is, while there are some tasks that obviously artificial intelligence is very good at, such as parsing massive amounts of data and identifying patterns, the ultimate decision at this point is going to rest with the human. So in the case of life underwriting and growing sources of data available to assess risk, and there is an amazing amount, it would take a human underwriter significant time to review. So let's simplify it. Let's pinpoint the patterns within these data sets, add AI, and we can make the underwriter's job a little easier and a little quicker by removing the grunt work, the administrative work, And then we enable the underwriter to act upon the data itself, which we mentioned earlier. We've also seen situations where insurers use straight-through processing to underwrite smaller face values. This obviously frees up underwriting capacity for the more complex, higher face values. So it is human plus machine. The two work together. And you got to remember one last thing. The machine is only as smart as it's been educated. If you go back to programming days, a computer does exactly what you tell it to do, nothing more, nothing less. So even with AI, the education is got to have to come by the human, especially at the start, and allow it to grow.
Yeah, and you see these same models kind of play out in commercial. The computers, like AI, can be extremely useful in cleansing the data, preparing the data, making sure we have the right data. Actually, one of the things we know is a major problem is we get the industry code, which is critical to your small business and large commercial writing. We get it wrong 20%, 70%, a large percentage of the time. With computers, we can get it right. So in that case, we want the machine to do it. When it comes time to the judgment, we want the underwriter to do it, but informed by the machine, informed by, it helping to point out, if I have 300 locations, by the way, here's the 10 that are near cats. Here's the one that has an ITV that's unusual for this piece. Pay attention to these as opposed to the others. This is the area from using comparative analytics. This is the one where this company doesn't quite look like its peers, so maybe pay more attention here. So you can use the machine to draw attention to help make sure the underwriter isn't missing exposures, that they're considering the risk appropriately. But the ultimate judgment and later on, the negotiations and other elements that underwriters are critical for, we still want the underwriters to do it. We just want to help them do it better.
Yeah, that makes sense. So then, given the collaboration between human and machine, how do you see AI-led underwriting affecting the core policy administrative systems? And really, in other words, where should insurers invest?
Well, see here. Go ahead, Kim.
Go ahead.
Sorry.
I was going to say.
No, be my guest.
Unfortunately, if you look through time, situations have occurred where some sort of event has been experienced that creates change, and the pandemic has been no less. Unfortunately, we've seen a lot of change, especially around policy admin systems that were pushed through the pandemic, and life insurance that had already modernized their core policy systems were much better positioned to handle remote work and contactless underwriting. So my advice is, and it's simple, if you haven't done it already, modernize your core system. You also want to make sure that the system can easily integrate with third-party data sources and other technology, such as predictive risk models, because that's what's going to be needed.
Yeah, and take it a step further. So in commercial P&C, we have, and even personal lines P&C, some slightly different challenges than on the life side, but all of it points to the same piece. When I take a step back, you kind of view that, underwriting platforms have gone through a number of different stages. The first stage was I had base rating systems that would allow me to do the base rate, but wouldn't actually do anything else, right? That was the first generation. We had those 20, 25 years ago. The next piece was I married that base rating systems with workflow systems, right? And that's where kind of the modern platforms are today to allow the workflow and do those different elements. And they've gotten very, very smart where they can ingest data, bring data into the process and do different things, but they're not really big data platforms. And so what we're starting to see is the third generation of underwriting. The third generation of underwriting is we want to take the best of those current generation platforms, which we have some great platforms out today, marry them with a big data platform that at the point of need in the workflows that the modern systems can control, they can bring the analytics, they can bring the models, they can bring unique data visualizations into the process because they're very specialized to handle the data side. And by combining the best of both of those pieces is where you can really get powerful transformation in where underwriting can go in the future.
So are insurers behind in the use of AI for underwriting? And if so, how far?
So it's interesting when you say insurers, because it's a difference whether I think insurers are behind or underwriters are behind, and you kind of get different answers along the way. In general, insurers are behind in, compared to some of their peers in retail or banking and in different elements. But when you look even within an insurer, I would say in general, underwriting is behind its peers even within the underwriting practice itself. Claims has had a more focus on bringing in analytics, bringing in artificial intelligence to help, drive specific outcomes and drive specific paths, and has started to get fairly sophisticated in those cases of using it to drive interactions and things along those lines. And so we can see a cohesive vision starting to emerge for how AI and analytics and advanced tools can actually work in the claims practice. Underwriting instead is much more still in the learning stage, right? There's little tactical solution here, a little tactical solution here, or there may be narrow companies that are actually using AI in a slightly broader piece, but you're not seeing that cohesive vision yet. And that's part of the challenge that we see with underwriting is there is this need to take this next step forward and take a leap and really consider how AI can actually be used from beginning to end through the underwriting process. And that's where coming back around, where it needs to be more strategic, and again, where we think the role of the Chief Underwriting Officer is to help drive that vision through the underwriter and help it catch up and help it, set that direction and set that vision.
Right. So then, what is the market for AI-led underwriting?
Josh, let's flip that, can we? Let's look at it another way. Should we be asking, what is the opportunity cost? Okay, Accenture surveyed over 500 interesting firms, they were probably interesting, insurance firms, and found the opportunity cost as high as 37% fewer revenues over an 8-year period. When you compare that to insurance leaders that have adopted new technologies, such as AI, that's a fundamental difference. We have a report, a Future Ready Insurance Systems report, and that can provide the details, and I do recommend people reach out for it. In it, you'll see how silos within the legacy carriers are either missing the opportunity from technology investments or not realizing the full value of technology investments already made. In the life insurance business, we see AI as a catalyst to expand business by enabling new models such as pay-as-you-live. It's going to move down the side of P&C and motor insurance, similarly to what they're doing today. If you have a look at P&C or motor insurance, they came out some time ago where they put the little box on the dash. Personally, wouldn't be in a rush to do it. I probably have a little heavy right foot, but it monitors your driving and the premiums adjust against your driving capabilities. We buy a life insurance policy for 30 years, and my body is physically changing massively over that time. Why aren't I following a similar line? Why aren't I looking at my Fitbit and my watch and everything else, pulling that data in on a real-time basis, adjusting the algorithms and the calculations? The AI can be monitoring all the way through and now giving me a premium on a yearly or even a monthly. Yes, we have to redesign our products. Yes, we'll have to address regulations, but that's where we're going to go, and that's where we're going to get. I really believe that.
Terrific. So, all right, so the technology is there, the ROI is there. Where do the insurers actually begin, aside from actually, of course, contacting Accenture?
Well, and this is, and again, we're trying to get the role of the Chief Underwriting Officer to change as well. And so, again, they're in a governance role today. We want them to get into a driver role. And so for them to start to play that strategic role, one of the first things they have to do is help make sure they understand where their business actually is today. So a much more detailed assessment, understanding, where are the processes breaking down? Where is the underwriting breaking down so it's not as effective or efficient today? And also looking ahead is what are the changes that are coming? So what are the changes in distribution that are going to come in those areas? And there's different ones going on depending on the market. Sometimes I see broker and agency consolidation. Sometimes I see explosion of new direct sources. Sometimes I see completely different sources as far as, MGAs or, original equipment manufacturers or original service providers emerging. And so you got to kind of assess that piece and then drive the imagination. What is that kind of future that we could do? And then come back around the tactical step. Don't do it in reverse. Don't just, we'll learn from this tactical and learn from this tactical. We've done enough of that. The time is no longer to do the tactical pieces. The time is take that leap, set a real strategic vision, and start to take their first steps toward it.
And from a technical perspective, I like to throw that in. The ecosystem must be able to readily absorb and process the data in a real-time manner. You need to be able to leverage data partners who can help scale the process. And once you have the data in the system, you need to be able to use it. And then obviously the next step is to focus on the product design that can capitalize on that data as it evolves over time. And then your AI underwriting can be tuning it in a perpetual motion so that they can look at the sales, they can look at the payouts, they can look at the decision process, and they can grow and expand to the point where it becomes self-perpetuating.
Yeah, and when you do that, the solutions are endless. It's like a simple solution. So renewals, right? Renewals should be the easiest thing in the world. But add AI, add some of the thought leadership, and you can completely reimagine it. So take a small commercial renewal. What if I, use third-party data to see where that business has actually changed, so I don't have to send the application out. I don't have to go back out. I can actually use third-party data sources or data scraping from webs and whatever else and find them. I can have an AI reach out and have a conversation. Hey, your renewal is coming up. It looks like your hours have changed. Are your new hours this? Has this changed? Are you now using drivers because of COVID? All these things have changed. Let me just get these answers for you. Oh, I have those answers for you. Thank you. Oh, by the way, your new price is going to be this. We'll send you the quote out. We're like, I can completely reimagine that experience if I take the steps to do it.
Yeah. So what mistakes have you seen insurers make, and should they be aware of, and what should they avoid?
I think the biggest piece is it's been a lack of imagination and a failure to be bold. It's, going back to where we started. They've, incremental steps, small tactical solutions, and lots of tactical solutions. And those tactical solutions, they have their actuaries building lots of little models that the underwriter is supposed to use, which makes the process slower, which makes the process harder, and is not actually improving, right? It's not that we got to get out of that kind of mode. We got to get out of the mode of pilot or just do it off to the side. It has to become strategic. It has to become reimagining. It has to be driven, an underwriting experience driven, and driven by real financial goals that are significant targets, not small incremental changes anymore.
I agree. I agree, Michael. It's going to be proactive and not reactive to industry's change. We need to look at the early signs. They're out there. Change is coming. We need to take a step back and look at the underwriting world holistically. We need to utilize everything that's available, like business intelligence reporting, to identify the problem areas and then act upon them. We need to make sure the physical environment is capable of supporting your strategy. Remember, the solution is only as strong as the weakest link. So we need to look right across the enterprise, not just the core system, and plan the tech accordingly.
Terrific. If there's one key takeaway from all this, what should it be?
For me, it's no longer the limitation. It isn't. It's not what's holding us back. It's not what's preventing us from doing anything. The technology is there. The technology is ahead. It's lack of imagination. It's actually thinking and being bold enough to rethink and having the courage to rethink. What if we did this completely differently? What if we approach this in a different way? Now, underwriting still has its core goal, right? It still has its critical goal to protect the company, and it has that function and will always have that function. But there are such better ways to do it if you're willing to consider and willing to reimagine what the agent experience could be, the broker experience could be, the end customer experience could be. Heck, take the simplest example in the world. In 1600, when modern insurance started, how did we deliver a policy? Well, I handed it to the little kid next to me who, they wrote it up and they walked it down to the street to hand it to the customer. And then we got bold enough of well, now I can actually put it in the mail. And then I went from mail as I sent it by FedEx. And then I got really fancy and I faxed it. And now 300 years later, the best we've done is now we email it, right? And yet there are collaborative solutions. There's ways to integrate. There are ways to deliver it in different, even that simple thing we could completely transform, but we're stuck in a way into which we did it 300 years ago. And most of the underwriting process is the same way. it is time to make a change. It is time to be bold, and it is time to be imaginative and really take this to the next level. And if you do, the financial gains across expense, across loss improvement, across growth are there. They are tremendous, but it takes the leap.
Yeah, you can, Josh, you've heard the passion coming from Michael, and I'm of similar vein, and maybe a little pessimist at times, but the future from my perspective is bright. It's a pivotal moment in time for underwriting, and I think companies just need to act upon it so they're not left behind. You know, we at Accenture, we're already working with a couple of insurers that have the foresight and are adopting change at pace. So others need to come on board. Otherwise, it is going to be a completely different marketplace in a few years. And I'd hate to see some left behind.
Terrific. Well, Michael, Kim, thank you for spending some time with us today talking about the future of the Chief Underwriting Officer. Really appreciated the time. I enjoyed reading the paper. I want to let everybody know watching today that they will be receiving a copy of the report. And if there's any further interest in the topic, they can reach out to Michael and Kim. And again, on behalf of the International Insurance Society, Michael, Kim, and Accenture, thank you for being great partners. Thank you for sharing this new paper with us. And we're looking forward to hearing more about this topic as it develops.
Thank
Thanks,
you.
Josh.